Live, and good morning. We are live. Welcome to Behind the Markets, the online edition. We'll be joined by Stephanie very soon. My name is Munyumba Mutwale, and I am your host, getting you ready for your early morning dose of financial markets data and financial markets activity. It is Behind the Markets Futuristic Friday. We will be going through two big discussion points today. One is the potential importance for CBDCs with Zambia, and two, the importance of private capital in Africa as part of our Bloomberg New Economy Africa Gateway Summit review. So we've actually been going through each of the panel discussions and what potential policies we should be looking for coming out of some of these. Well, thank you very much. And let's get started in our Futuristic Friday. As I said, we'll be joined by Stephanie very soon, who will be with us online. And if you're with us today, please give us your name, where you're joining us from, and also tag a friend. Share this with a friend. Share this with somebody who you know that in the morning they need their dose of business information. This is for entrepreneurs, investors, various people who are just trying to make good business and finance decisions. Information is what gives you the ability to make good decisions, take good actions, and sharpen your axe and make improvements. Well, thank you very much. Let's get started. Well, it is the 21st of July, 2023, and it is Futuristic Friday. And on Futuristic Friday today, we'll be starting with our market roundup. And our market roundup, we've seen that the Kwacha has lost steam back again to 19.25. So we basically worse than we were before that huge dip took place. Currently, the dollar is up 2.64% on the week, and 8.45% on the month, and up over 6% year to date. We are having an acceleration in the dollar as we are seeing a lot of action as we're trying to await our creditor negotiations, our private bondholder negotiations. Let me either say our private creditor negotiations. We did see the stock market hold still yesterday at 8,230. Remember, it only moved slightly on news that CEC is actually getting ready to reach that concession with KCM. And as I said, we'll be joined by Stephanie very soon, but with KCM. And we also did see that the bond index moved up about 0.6%, but in dollars moved down to 290 again. We've seen it. Interest rates domestically starting to move down just before the bond auction signals that we're still getting some buying activity happening on the secondary market on the secondary market itself. Now, moving into the FX rate, we did see that 19.25, as I said, is the close of the Kwacha. The dollar is up 0.78% as of yesterday, but up 6.39%. Year to date, and we did see that the rand also moved up about 1.2%, up 1.11% on the month, but year to date, sorry, up 1.11% year to date, and up 1.2% on the month. So this is where it stands in terms of the rand. Now, we did see also that the bond index is up 14.77% year to date, and dollars up 7.87% year to date. And we are seeing that interest rates did move down again by about 0.23%. So we're getting mild movements downwards in our interest rates, and then these huge shock movements upwards that are happening. Remember that there is a bond auction happening today. Applications for retail investors closed yesterday. Closed yesterday at 16 hours with 2.6 billion kwacha on the auction block. Expected that interest rates at bonds will pretty much remain the same, especially for 2, 3, and 5 year. Those ones we don't see them moving much because there hasn't been any movement yet in our rating as a country. We'll be waiting for Stephanie to join us fully in steam. Now, we're also seeing the commodity markets. We did see that copper was up 0.88%, while oil was down 0.24%. These are oscillating on hopes of lower interest rates as you're getting slowing inflation in Europe, slowing inflation in America, slowing inflation even in South Africa. The hopes are you're going to start seeing some sort of monetary stimulus coming back into the economy at the end of next year or somewhere in the middle of next year. And now also seeing gold move down about 0.27% yesterday, but still up 8.02% year to date in dollars. But in kwacha, we're seeing wealth insurance assets up. Bitcoin is at 574,006. This is 0.5 So yeah, so this was 0.5% up 90% in the last, up 90% year to date. And on the month, it's up 20.77%, mainly due to a Bitcoin rally because of all the expectations of ETFs that the American SEC is actually getting. And these are big, heavy hitters who have actually put in some ETF applications. 67% year to date movement upwards in terms of Ethereum, up 19.1% on the month. And we've seen that gold is up 14.92%. Remember what I always say about wealth insurance assets, people. Bitcoin and Ethereum and gold, dollars, these are all things to hedge against your stocks and bonds portfolio. The real part of your wealth is going to be your stocks, your bonds, and your real estate. Those are your three strongest parts of your passive wealth assets. Outside of those three, it is really then you got some of your businesses, how you make your money, and these are how you protect some of your assets when there's broad market downturns or disasters happening around the world. These are the things that actually kick in. So year to date, here's how our markets are actually looking. Wrong date, sorry about that. 14.8% up on the bond market, 12%. Stock market has been stuck for the last month, 6.4%. Because we're waiting for earnings season. Remember that this is the season now where we start to get earnings results that should start coming out of the stock market. 14.9% gold, and 91% up Bitcoin, and 67.5. We're getting inflation data coming in next week, as well as the movement of the oil price, which we'll be giving you on Monday. But the expectation so far is that we're expecting oil price, the petrol price, to move up by 0.5 kwacha, so 56 ngwe. We're expecting a 56 ngwe movement upwards on the pump price this month, mainly due to Brent crude prices trading at an elevated position this month. So also coming into our four horsemen, we do see that in terms of inflation reads, we did see that German PPIs were only moved up by 0.1%. So that's a headwind. That's a tailwind that's actually supporting the economy. Korean PPIs also came into contraction, and Japanese CPIs also remained relatively flat, but they are rising slightly, with Malawian CPIs also starting to come down, even though inflation is extremely high in Malawi. So inflation is starting to cool down. And PPIs are a very important read. We read PPIs because they tell us what's going to happen in terms of CPIs later. CPIs, in other words, consumer price index or consumer price inflation, is a lagging indicator. It is the producer prices that determine the consumer prices, because if producers experience higher prices, they pass that on to the consumers eventually. If producers are experiencing lower prices, their margins are wider, so therefore we might get some competitiveness. So that's why PPIs around the world are giving us a much stronger read than about where CPIs are heading. And therefore, it's a very powerful read. In terms of interest rate data, we did see that Spanish interest rates came in a little bit lower, with South Africa holding its interest rates flat, but Spanish 3-year rates were up. American 4-week, 8-week, and 10-year tips were all up. So interest rates in America are still rising. So we still have a high or elevated rate environment. In terms of income activity, we did see that continuous jobless claims in America have continued to rise, but initial jobless claims did drop, and that was a good thing for them. The leading index was negative, and it has remained flat. Consumer confidence data in Britain, yes, is negative, but is getting less negative. Europe, and consumer confidence in Britain has continued to sink deeper and deeper. So we are getting mixed reads in terms of economic growth globally. So we've got weak economic growth globally coming. And in terms of industrial activity, we do see that existing home sales in America were up 3.3%. We're down 3.3% versus the previous month, where they were up 0.2%, meaning that we have a slowing home market again. These are the seasonalities of home constructions or existing home sales or property sales, and this basically affects the outlook for copper, seeing a weak property market. However, it is the car market, the auto industry, that is actually still supporting strong copper. In other news. In terms of our main issue today we want to discuss a special issue today, which is how blockchains and CBDCs can transform Zambia. So we did have an economist that came in recently this week on our news, who said that Zambia needs to embrace the use of blockchain technology in government spending. This was Webster Matambo who actually pointed this out. He said the country is currently in a situation where we want to move from a corrupt or unaccountable government practices. And this is important. So we want to make sure that tax money and public money is managed correctly and collected well. And we want to make it easy for everyone to see the procurements that are not meeting key performance indicators, and also there's also a need to move towards a direction where international payments and also reduce costs of transactions. So this is why we're looking at blockchain technology. It's one of the biggest innovations in finance. You have to understand, this is one of the biggest innovations in money since paper money. And paper money was invented back in 1860. And now paper money was the big innovation that changed a lot of things, because then it eventually introduced central banking on a broad spectrum back in 1913, when America created its first central bank. Around that period, that's when you saw the creation of the central bank. And that is when you started to see the idea of central banking and monetary policy become a major part of the economy, and an independent central bank and so forth. So that was the last time we saw a huge innovation in money. Now, Bitcoin and blockchain have actually proven it. Now, is Bitcoin going to become the currency of the future? Not too sure about that. But the underlying technology of blockchains creates a public distributed ledger which has got an automated audit trail built into it. And that is very important. The fact that Bitcoin has managed to do trillions of transactions with an audit trail built into it already tells you that there is a possibility of an automated system, and the integration of things like smart contracts. There's a lot of innovation happening here, which is actually creating the future of money. And central banks, due to the rise of something called stable, they had no problem with cryptocurrency, because those things were way too volatile to be the new currency of the future. What scared them was the creation of stable coins. When you started to see stable coins such as USD Circle and USDT, where people are holding Tether as dollars. Zambians, for example, can go on to their wallets, whatever cryptocurrency wallets, start buying Tether tokens as dollars without even setting foot in a bank effectively, or setting foot in a bureau. So they've got these tokens that they can store dollars in. That is something that is very big on the market. That's a big innovation. And that is an easy way for people to transfer the use of dollars. People are able to hold American dollars here in Zambia because every Tether token is backed by a dollar inside the Tether Institute. Now they've got treasury bills, dollars, and various things, but it's somewhere. It's almost every. It's not the total, but almost every. And it's much better than even the way the bank balance sheets are covered. So when you look at this is a huge innovation in how money is being handled. And it's actually a threat to a lot of emerging markets countries. Now, I want to contrast this with Zambia. Zambia's revenue mobilization strategy in 2024 to 2026 is talking about tax enhancement, electronic invoices, streamlining tax incentive, digitization of government systems, and then also formalizing the mining sector. And they're trying to increase their domestic revenue. They're really looking at strengthening tax policies, improving taxpayer compliance, and then also strengthening tax administration capacity. And I'm gonna go down to an example that's actually happening in Israel, where they're working on the Israeli initiative, where they're trying to talk about how you can automatically collect sales tax on things. Very easily, without any administration having to, but it can be done automatically at source, at transaction, thanks to CBDCs. Hopefully I think we're getting a bit of noise there from Stephanie's side, but thanks to CBDCs. So the question I'm going to ask in today's show for everybody, and thank you for all of you who are joining us. Do you think Zambia should have a central bank? A central bank digital currency? Do you think Zambia should transition to a central bank digital currency? Please give us your thoughts on what you feel about that, and whether you think it should be true. But do you think we should be having a central bank digital currency? If you're watching, please, or if you're watching online, or if you're on air, give us a message about what your thoughts are. Do you think we should transition to a central
At this
bank
point, Munyumba, at this point, I think we should also get to introduce the phone lines for people that want to actually get to comment on 077-1616-290, 077-1616-290, and you could get to ask that question again, Munyumba.
Thank you very much. Yes, please remember the phone lines for those who also want to call. Do you think Zambia should be moving to a central bank digital currency? And I'm going to try and make the case of why I think we should be as soon as possible. One, I'm pointing out here that we are working on this, but like I said, the question again, and I'm going to put it on the board. Do you think Zambia should transition to a central bank digital currency? In other words, and I'll explain what that is. Now, we are trying to move to a regime where we're trying to make it easy to collect and pay taxes, because what it seems as though is the government wants to operate more on tax revenue than they want to operate on borrowing. They want to grow the economy and grow the tax base and therefore make it easy to collect taxes. So they're working on electronic invoicing by 2024. They're working on government information systems, integrating financial management systems, land administration. By the way, there is a great project in the crypto space where they've actually created a virtual world where they're actually able to distribute land in that virtual world. And they've got a full publicly distributed ledger that actually controls the management of land in there. That is a perfect lands administration system, actually. It's a very good one, and it's one that we should consider even integrating here, but it's for a metaverse. Now, they've already tested this out, and it's been running for a long time, and they've got the tokens to back it. But the system underlying it is almost genius and almost perfect for things like that we're trying to do. And it helps protect land rights much better. Zambia also looking at a business administration system and road traffic management system. We're also trying to figure out manual receipts and government receipts, and also streamlining tax incentives. Now, remember that this is where our strategy is going, trying to enhance the revenue component rather than just finding and looking for money, because that's what we've been doing for the last decade. We've been looking for money. But let's look at the situation of where we can actually look at how to improve this. So Zambia Central Bank in February 2022 did say that it is trying to look for a CBDC, while it did warn about crypto. And they did say that the Zambian Central Bank wants to cut transaction costs and increase citizen participation in the financial system. Because what you can do, by the way, if you look at mobile wallets, for example, mobile wallets have improved citizens' participation in financial services, because about 59% to 60% of Zambians have got mobile wallets. Okay, so that is something that we actually have seen, about 59 to 60%, according to FinScope 2020. We did see that Zambia mobile wallets versus just 20% of Zambians who have bank accounts. So it does improve. It does prove that digital wallets are better for people to access financial services than bank accounts. They've been more effective because of a lot of the KYC and all the processes required. Digital wallets have actually been very useful. So creating central bank digital currencies is actually helpful in creating wallets that can be operated or at least distributed by the central bank, giving people more autonomy with money. The motivation, obviously, is in part the concern that they will see lower demand for fiat currency and a drop in citizens and drop citizens' use of CBDC. Fiat currencies should citizens use CBDCs from other countries. Now, remember, I've said that Zambia can hold Tether tokens, which is US dollars. Zambia can switch from their currency just from their mobile accounts and start buying Tether tokens, which is a pegged stable coin that connects directly with a US dollar. Okay, that gives people the option to actually start saving in dollars rather easier, or accessing dollars rather easier. Now, 4 trends that are pushing central banks towards that have spurred central banks' interest in CBDCs is: 1, cash usage is rapidly declining. It's rapidly declining. Think about this. Zambians used to use checks and ATMs more than anything else in 2010. Today, checks plus ATMs only make up 10% of retail transactions in this country. Number 1 is mobile money. Number 2 is point of sale. Number 3 is electronic funds transfer. Those things together make up over 86% of the money transacted in Zambia. 90% of each transaction volume is just coming from mobile money alone. So already people are using less ATMs, less cash, less activities. There's also growing interest in privately issued digital assets, signaling the potential competition for central banks. So this is where the problem starts to come even for the Central Bank of Zambia. Zambians can start diverting around their currency with using Tether tokens. They saw this, by the way, in Turkey, when President Erdogan was handling the economy in a very poor state, Turkish people were buying Tether tokens at rapid rates, deteriorating the Turkish currency. Some central banks also perceive the erosion of their role as payment innovators should they not take up the role of CBDCs. And many central banks are looking to establish a greater local governance or over increasingly global payment systems. So you're getting these increasingly global payment systems, and there is something that we should take into consideration. And we are getting some answers on some of these, and thank you very much. So there is a pressure from people. These central banks are currently under pressure to deliver payment vehicles that provide several features that people like about money. The ubiquity of money, for example. Money is everywhere. The ubiquity means that it's everywhere, and we've seen that it's universally acceptable. It's common. Money is a very common thing that's around. It's not something that's hyper rare around. The other thing about money is it's universally accepted. You can go anywhere in this country and trade with money. Okay, so they want something that's universally accepted, that's everywhere, and that also protects a person's anonymity. And this is where the struggle of central bank digital currencies come in. Anonymity. Because the problem now everyone has is when I transact with cash, I have my privacy. But if I'm using a central bank digital currency, they may not be an issue. But it appears Zambians are comfortable with that because we're openly transacting with mobile money, meaning that we are comfortable with mobile money transactions. Meaning we're comfortable with our data being collected, because don't be fooled, people. They're keeping track of your transactions, even in mobile wallets. So your name is attached to it. That's why we had to register our NRCs with our mobile wallets. We had to do that. So that's why there was that ZICTA exercise, because there is data attached to that mobile wallet. That's a reality. So there seems to be okay. So what are the benefits and drawbacks? Now, I just want to remind people, a central bank digital currency, I may have switched this, is basically when your central bank is operating a digital currency and they're able to distribute it and manage it. Unlike Bitcoin, which is not managed by a central authority, central bank digital currencies are more centralized. So let's take a look at the benefits of it. One, they do increase payment efficiency. Okay, because they're not as many, because it's a direct way to do peer-to-peer or end-to-end transactions with very little middle operatives. In all other forms of payment systems, there are lots of people along the chain, but in central bank digital currencies, there's nobody in between. You can literally send a currency from one person to another, because cryptocurrencies on themselves were a huge innovation in that they were both money and a payment system. Most things like mobile money is something you have to load with money. And then digital tokens either needed a payment system to transfer that money. So the issue now is you now have this thing that is both money and a payment system. So it's so efficient that it can actually start sending, and it's a network. So remember, it's also a network. So it's all three things that you need from a modern payment system. The other good thing is that complacent current forms, there was also complacent current forms of money and financial services. It does deter criminal activity because, unfortunately, if you're on a central bank digital currency, you're not going to start dodging taxes and conducting money laundering, because people will be able to catch you. Okay. It also improves international payments because the IMF is currently working on interoperability of currencies, a platform to help with that, and also potentially reduces the net transaction costs and benefiting lower income households, because there are costs with handling cash. This is what people don't understand. There's actually costs with handling cash. There's costs of other things. Now, the drawbacks of central bank digital currencies is it requires an overhaul of the current financial system, which can cause interim instability. That is something that can occur. The effectiveness of monetary policy can start to deteriorate, because now it's going to be it does not allow for the control of money the way central banks have been doing it through the banking system, because it may actually affect even the banking system. Operational difficulty. It's not that easy, people, to run a central bank digital currency. I mean, it's taken Tether and all these people decades to even get close to getting right on just money transfer, let alone payments and everything. And as has been pointed out with one of the questions that is coming out here, is we're also dealing with And I think one of the answers here, Aaron Kabwe said, we need to consider the risk of cyber attacks before we move digital. The current status of the country is exposed. High time. It is true. The current status of the country is exposed, although even your mobile wallets are wildly exposed. Just also to monitor that, people, where your mobile wallets are wildly exposed. You're at the mercy of the cybersecurity of the mobile companies. So just remember that. So we are still facing this risk. So either way, even with the current status quo, we are still dealing with this. But Aaron, you are correct. It's one of the risks, cybersecurity risks, and also privacy and loss of the ability to transact anonymously. If you do, and the question you need to ask yourself is, if your government wants to target you and there is a central bank run digital currency, they can freeze your assets and come after you. Meaning, central bank digital currencies can become a political weapon if not managed correctly. The same way the government has the right to freeze your bank accounts, the same way the government freezes people's treasury bills payments, the same way they can do that. If you have a bad government in place, they can attack you with it. So it also has to protect the anonymity of people and also protect their rights. So digital rights becomes a very difficult question to start to answer. Now, an interesting piece of information that actually did come out is we actually have seen a model, which is why I brought up the issue of tax collection. In Israel, CBDC, the CBDC initiative, where they've combined CBDCs and smart contracts to aim to improve payment convenience. And one of the first ones they've seen is that payment of sales tax, or VAT, to tax authority is done at point of transaction. It's not done later. It's not where the vendor collects the money. They have programmed the money to collect the tax already, the same way an Ethereum transfer already can take out fees, the same way a Bitcoin transfer already has fees attached to it. So what they've done is payment of sales tax in here can be programmed into the money. So you can actually get VAT transactions already programmed into point of transactions. The second one is also that social benefits, things like social cash transfers, whether it's FISP payments, whatever it is, can be automated and can be handled much better, because we have seen massive corruption in those areas. Digital versions of that with a CBDC could actually be very helpful. So you've seen that two areas is that tax collection and automated social benefit transfers is actually quite a useful model for this. And also, finally, types of CBDCs that we have seen are what we call retail and wholesale CBDCs. So wholesale CBDCs are mainly just issued to financial institutions such as banks, they use the CBDCs to allow them to make payments quicker, automate them in a manner, cross-border transactions. Those are the main things. So it's for wholesale payments, not for retail payments. Retail CBDCs are primarily for individuals and small businesses, and people could use them as digital cash with the comfort of knowing that the currency is backed by a central bank. Now, this innovation could potentially replace the need to carry physical currency and reduce the economic rents associated with transacting in the legacy financial system. So lowering cost of financial transactions, and this is a threat. It can be an actual threat even to banks. Now, biggest differences between CBDCs and cryptocurrency, because people think about this, is that CBDCs are centrally controlled, cryptocurrencies are not. Cryptocurrencies are controlled by a network and they're controlled by an algorithm. CBDCs are more controlled by central banks. But what you can actually do, even with some CBDCs, is control monetary policy using algorithms. That's actually a very good one other thing. You can program even monetary policy. The way Bitcoin's monetary policy is programmed, there's an actual amount of Bitcoin that goes out every single day. There's an actual Bitcoin inflation that is programmed into the system and has been there since the beginning, protecting the integrity of the network. Now, CBDCs can have that, but they also give the central bank a little bit of control. And the underlying value of a CBDC, this is where the value of CBDCs come in, is that they're more likely to be stable. But you already have stable coins there. Stable coins are already able to do that, where they can be pegged to $1 and they can act some form of stability. So this is generally the information that we have out there in terms of CBDCs. Now let's get some of the answers to the questions that we've gotten here. As I said, Aaron was talking about we should consider With the current status quo, the country is heavily exposed. Cybersecurity is a skill that we need to build in this country, regardless of whether we switch to CBDCs. I do understand that that is correct. Wix Muluba says, do we have any local global ETFs? No, we do not. We haven't worked out that. But Wix has actually asked, he said that, yes, BOS should consider a central bank digital currency. They're currently in the research throes. Vernon has actually joined us in the comment section today. Said the idea of transitioning Zambia would be a game changer, absolutely. But my thoughts would be, are Zambians ready for such financial innovations from the mobile systems? Just to think about how not everyone is able to transact just with mobile money. Imagine migrating from that system. And Vernon has gone on to say sensitization and education by our regulators should be done before fully operationalizing these online transactions. On the bright side, regulators have the upper hand have the upper hand in regulating the sector. Thank you very much, Vernon. That is a very important point. So I would say this, it's not something that will happen overnight. Even a country like China is rolling it out slowly. They're rolling it out in certain cities. So they're slowly starting it. I wouldn't underestimate the Zambian ability to transition. I think the way we've moved from cash to mobile money has proven that Zambians can really move fast. And even with mobile money transactions, as much as we'll say that, yeah, not everyone can do it, it's still the most dominant form of payment in our system. It's actually become that. And East Africa altogether, because decentralized systems are very good for our people. So I think where we struggled with financial inclusion has been the banking sector has had a lot of regulations in terms of getting people on board. A CBDC would allow a lot more people to be able to transact. Now, it's not something we're saying we should do next week. When I speak, people, I'm talking about 10 years from now, 7 years from now, so forth. Okay, so I'm just trying to give people a heads up. I'm not talking next week. I'm talking years from now, but we need to start working on it now so that over the next decade, this should be a vision for 2030, that we should have migrated as a nation to a CBDC already. We should have gone from physical to
on the other side,
and we don't have to
and he's back.
We don't have to circumvent mobile money. We can actually we can actually use CBDCs and mobile money very well together. But it's just a way to integrate the system. So that's something to point out. Now, in the last 5 minutes, I want to talk quickly about private capital. Now, here's some information. This is another conversation about Africa. Here's what most people do not know. 25% of the world's consumer market will be in Africa by the year 2050. Currently, that's about 12, according to Johns Hopkins. And by the end of the century, which I know people don't want to think about, but you have to plan in centuries. Countries like China plan in centuries. 40% of the world's consumer market will be in Africa. We will be neck and neck. About 80% of the consumer base of the world will either be in Asia or Africa. That's the level of control we are potentially looking at going forward. We are going to dominate because we are the only place where we are having children as much. Africans are the only growing base. Now, take a look at this chart of Nigeria, where Nigeria sets to stand. Nigeria in 1950 was the 13th biggest country. If you look at that number moved by 7. Nigeria is set to overtake the USA by 2050 and is actually set to take on China by the end of the century. That is how the pace of population growth. This is a UN study that came out to show that Nigeria already is showing you that it's going to be 1 billion people alone. Right now, you're looking at close to about you're looking at just about 1 billion people in Africa. Nigeria will be 1 billion people by the end of this century. So this is the track everyone's looking at. So why are they looking at transitioning private capital to Africa? Now, there was a conversation on Bloomberg's New Economy Africa Gateway Summit, which was talking about putting private capital to work in Africa. And they talked about the motivations of investing in Africa, drivers of investing in Africa, exaggerated risk profiles, monolithic perceptions of Africa, risks in Africa, types of investments in Africa, how to de-risk Africa using first loss capital and African DFIs, and also exiting investing in Africa. So how do we attract private capital to come into here at a fair price? Our president has been stressing getting private capital at a fair price, not where where somebody says, I'll invest 100,000 in your business, but I want 90% because they're claiming your business is high risk. So these are some of the issues that we're looking at. So why Africa? So they talked about the fact that Africa is a long-term play backed by population growth. The majority of the rest of the world has got dwindling populations, and Africa is the only booming one. Just to give you some thought, people, 4 out of every 10 babies born in this whole world are African babies. That is how we are dominating going forward. 40% of the babies born in this world are African babies. Okay, so we are the fastest growing consumer market and said to be close to number one by the end of the century. So this is also the place where you're going to have the next pool of human capital in terms of the young working people. This is where you've got access to future resources. We've got the most untilled arable land. We've got 30% of EV mineral. We've got 30% of the EV mineral mix that's sitting here in reserve format. So there are rapid trends and transitions, things like the switching from cash to mobile money, the transitions in mobile uses and smartphone usage. And also the Africa Continental Free Trade Agreement also creates a combined market for Africa. And the problem that people have been facing with investing in Africa is investing in the individual countries, while the combined market has actually been a much better place. So why Africa? It's because of these factors. This is why people are starting to look at Africa a little bit differently as a place. And this is what Africa needs to market itself as. We need to market ourselves as the future of human capital, the future of resources, the place of rising trends, and a combined market. So the drivers of private investment in Africa, which we need to work on, are misguided perceptions of risk. Okay, because people assume risk in Africa that may not be there because they're sitting in rooms in the US and the UK and they're not on the ground actually seeing how investment works. For example, I've dealt with Zambians who are living abroad. They don't even know how lucrative their own bond market is. So they're busy thinking about investing in their countries where interest rates are very low. We've got very high yields. They didn't even know they had access to auctions. They just looked and said Zambia is a risk and blocked it out. Your own Zambian people had that misconception. Okay, we also have to look at creating mitigations to risk. That is also what also helps. Things like using blended finance, where you can use public finance, where you can use public institutions, where you can take certain equity positions. Blended financing tools also help in de-risking Africa. But they're also looking for things like predictable and stable policy frameworks, because investors value stability more than growth. They value stability because they know in a stable environment, they can get stable returns for a long period of time. And Africans need to learn to market ourselves better. This is what will drive a lot of investment in Africa. The other thing we also have to look at is what we call exaggerated risk. Risk is a part of the game. I don't know why global investors have this view that Africa is too risky, but risk is a part of the game. They also have a history of pushing past some risk. Because in China, they went into China and Asian nations in the 1980s and they pushed past risk. So this conversation about Africa being too risky is a bit hypocritical because they've gone past these problems before. African nations generally play by the rules as well. We generally pay our debts as well. I know we've had the default. Zambia has defaulted, but generally African nations pay their debt. We are fearful, by the way, of defaulting. We are the most fearful of defaulting when it comes to this stuff. And also, investors take an extractive rather than collaborative approach when it comes to Africa. You could see that the global investor community worked with Asia, but when it came to Africa, they just like to extract. So there is a different mindset with which they approach Africa, even though the risks between Africa and Asia were pretty much similar in the 1960s. The difference has formed in the way that investors approach Africa. That's a big difference. There's also generalizations of Africa. 54 nations with different growth paths, different regions. There is a world of difference between the way South Africa operates and East Africa operates, and a world of difference between the way Nigeria and West Africa operates, and North Africa. I think that they need to start operating with Africa from a regional perspective, because East Africa has a different policy to West Africa and to North Africa and to Central and to Southern. There are different policies and frameworks and systems at work. So you have to be careful in lumping an all Africa risk altogether. Global investors need to stop just reading these op-eds. This is what they were actually pointing out. And also they asked the question and said, if you are comfortable investing in Ukraine and Afghanistan, then you can invest in Africa. I don't understand how you can say Africa is too risky when you're willing to go into war zones where Afghanistan has been a perpetual war zone for a while. And also separating African nations by individual risk, and also encouraging investors to visit or collaborate with locals. Because I think where the mistakes have been happening is they have not taken a collaborative approach with the locals. So other things that we can actually, the risks that we do see in Africa, where investors have pointed this out, is political stability, policy and regulation, infrastructure, multilateral support, corruption and rule of law. That one was cited very strong. Sanctity of contracts and underdeveloped industries which create barriers. Also, there's risks at microeconomic and company level. So venture capitalists do find that the best way to actually invest in Africa is to create a diversified spectrum of industries and also countries. So if it's Africa funds, if people that will come in on an Africa fund and say, I'm going to invest in Zambia, Zimbabwe, different countries around here so that I can split my risk rather than having it concentrated in one country where there will be an issue. So Africa funds may be an issue. Now, types of investments that people are into in Africa is tech, and is tech-based investment, and specifically fintech. 60% of private equity and venture capital is actually going into fintech investments in Africa. So you can see that that's where a lot of it is coming. Business support technology as well, and key industry areas such as education, energy, and housing. Now, they're looking for commercially viable projects along value chains while simultaneously prioritizing mergers and acquisitions. So the first step is they're always looking for, is there a local we can buy into, as opposed to starting a business from scratch? And if we have to start from scratch, can we get a local to collaborate 60-40, like a government sovereign fund, or something like IDC to collaborate 40% while we do 60%? And also, can they feel more comfortable investing in cross-border assets? Banks that maybe are in multiple countries, things that are in multiple countries, they feel more comfortable investing in cross-border assets than centrally concentrated assets. So that's something that we also do see.
Yes, Munyumba, could we be winding up? Time does not seem to be our best ally on the other side.
Yeah, no, we are. This is the final part. So one of the final part that they did talk about was how to de-risk Africa, and this is very important for us. We have to look at what private capital, institutional capital, and other capital are looking for. They did point out the importance of also capturing the African diaspora, who send back $100 billion worth of investment coming back to Africa, but it goes mainly to family support, black tax, school fees, those things, and doesn't go to things like infrastructure, capital investment, the bond markets. So how do you redirect African diaspora funds towards that? And also the African diaspora who were taken out by slavery, be it African Americans, Caribbean diaspora, and also African sovereign funds. Those are very important in investing. So we need to find out what these funds are looking for and find a way to tailor it, make ground level partnerships to help de-risk, and make sure that risk management is a continuous process with Africa, the way they did it with Asia. And that's where we're going to wind up there. So this is part of it. I'd urge everyone to watch the panel where they actually talked about the Bloomberg New Economy Summit on how to put private capital to work. How to de-risk Africa is a very important thing, and also getting all that together. That has been our show today. We have got many questions that we're going to be asking, but please feel free to continue answering the question. Do you feel that Zambia should transition to a central bank digital currency by the year 2030? I'm putting that out there. By the year 2030, do you think we should transition to a central bank digital currency the way we've transitioned from cash to mobile money over these last 10 years? Give us your thoughts. With that, Stephanie, I bid you adieu, and I'll see you next week.
Next week, Nyumba, have a good day.
Have a good day.